The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we got a market up 3 points on the S&P cash. Volume is light, 1.87 billion shares. We've been coming into this last few days at about 2.1, 2.2 billion shares. I suspect we are already starting to see the lighter volume that will be going on all the way through next Wednesday as we leave for the long holiday week end. But I digress. And, of course, we're going to come back after that and probably see some fairly decent volume. I don't know if the market just kind of hangs out here and waits for those numbers. I suspect they're going to be fairly good from the early results, and we'll talk about Best Buy in a few minutes. But to me, it is... I have to give credit where credit is due. The first person I heard say this theory was Tim Ord, and he says, you really need to watch out for markets that just hang out at highs, because they're going to break them. And that has been my experience for a while. I don't think we're just going to roll over here. I think come hell or high water, this thing's going to be pushed up 2.5%, 3%, at least the S&P cash is, over the next month. At that point, we're going to have a very long, light trend with a light volume, and when we come back the first part of the year, I think a lot of these stocks are going to be hanging out here. It is going to be the proverbial fastball down the middle of the plate. In the meantime, your job is to make a little money and try not to lose a lot. And it's always a tough time to do it. I try to basically divide my portfolio up into 10 portions, let me put it that way. If I have an ETF or something like that, I'll give it the weight of 2 portions. So, but most of the time, if I'm really feeling like I'm 100% bullish or bearish or think the market's ready to go, I will probably be buying 6, 7 positions, something like that. Probably a couple of in indexes and probably the other 4 or 5 in individual stocks. But right now, just got a few positions, and most of the time I'm hiding behind some very inexpensive out-of-the-money calls at the moment. If the market turns against me, I don't want to lose much. My guess, though, is we're going to be in this short squeeze cycle that seems to come out after earnings for most of these stocks. I've seen the first warning cloud, and we're going to talk about that here in a few minutes, but I don't think that the market's willing to look at it. I've been, for those people who have been listening for the last month or two, they know I've been working on the audio version of Jesse Livermore's thinly disguised autobiography, Reminiscence of a Stock Operator, first published in 1923, but really starting to look at how markets can be extended, and I'm actually getting the historical data to go with what he was doing and when he did it. It is kind of interesting to see that there are more than one book written about him. Kind of the patron saint of what we do here for the most part. Not everybody at TFN, but most people. Price and volume trading was basically made famous by a gentleman named James Wyckoff. He had kind of the equivalent of the, I think actually ended up becoming the Wall Street Journal. I think it was basically sold and wrapped into it earlier on. But I think it was something about this is Wall Street, traders on Wall Street, trading on Wall Street, something like that. I've got some of the original editions of that, and I just didn't need to look at them again to remember what it called it. I've read his book, too. But both of those very interesting books. The thinly disguised and veiled autobiography of Jesse Livermore, because he kind of disses a few people that were famous on Wall Street, and I don't think he wanted to get in to any lawsuits on it. But Wyckoff, very interesting guy, because he basically wrote a newsletter, had his own news outlet, basically his newsletter, suffered from people coming after him because he would telegraph out this newsletter to the recipients of it, and they would go out and hit positions, but the market manipulators knew that they could run these folks because he published his stops in it. So not a whole lot new under the sun. There was always a new thing. Wyckoff should have experienced QE. Might have had an addendum to his book. But it's not uncommon. In fact, what a lot of people like to call rogue waves actually happened in 1906 and 1907. I'm actually going to be writing a book, I'm doing the research as I record Jesse Livermore's book. But last night it took me back into digging in through some of the data in 2006. I hate to say that, in 1906, 1907, and the parallels in this market before what they called the panic of 1907 are fairly interesting, actually. -1, which is a big disaster. Why the big disaster happened, it's unclear whether or not that in another couple of months the same thing would have happened. But there were two times that the market really blew up in the early days, 1907 and 1929. Both times it was a huge amount of REITs at the very end of it. And I noticed that when we look at the IPOs, the amount of REITs coming out here lately have been pretty horrific. And, of course, the limited partnerships and all the other stuff that seem like dubious investments at best. But I digress. Of course, we're going to, I can't imagine us not winning the digressing award yet again this year. But we will take a look at it. What else do we have going on out here? Let's take a look at our histoire. Cascade International on this day in 1991, a fashion chain near the top of the Business Week's 1990 list of hot growth companies, announces that its chairman, Victor Incendi, has disappeared along with more than 200 of the Cascade stores. Of course, they had about 30 real stores. They would open up stores and then close them down in various areas. But they were able to list them. They were buying locations of a previously ladies' clothing stores and boutiques and cosmetic stores as the rise of places like Target and Walmart were putting them out of business. Anyway, fairly big, one of the biggest frauds ever in Florida. He absconded with about $200 million and also left his wife holding the bag. She went off and married some other guy and was living under his name for about 4 or 5 years until she got nabbed. I was actually just before the show looking to see. She only got 7 years, so she should have been out in 2002 or 2003. Orange is the new black. But I couldn't find anything in the news about her getting out or what happened to her, where she's gone since then. But they said she was hiding because she changed her name. Of course, she got married. And some of the sometimes you read these things the police charge people of, and it seems rather ludicrous. But I don't know. You get married and you change your name. If you're a female, that happens. But she was hiding and using an alias. Yeah, but she had been divorced and did remarry. But they nabbed her outside of a fitness gym. And I saw the picture of her coming out of the gym. But 7 years, I don't know how many years she served. Maybe she was out by 2000. But still one of the guys that they've never been able to get, Victor Incendi. He was Hungarian and probably loved his goulash because everybody believes he was, the U.S. Justice Department chased him down to South Africa for a while. But as of the last 10 years ago, he's thought to be hiding out in Hungary where the police will not come and look for you unless you killed somebody. You'd either try to kill somebody or kill somebody. Other than that, they can't really be bothered. So him and his $200 million are probably still hanging out there. He's probably paying $1 million a year to somebody over there in Hungary to make sure that he doesn't face any justice. But well, he's got to be pushing 75 now. So, but on this day, but one thing that fundamental people will always tell you is the earnings are this or the earnings are that. What you should always know is that why figures don't lie, liars can figure, and he did a very good job of that and left everybody hanging the bag while he exited stage left. But one of the few people that actually have gotten away with it on this day in 1991. Salesforce came out with earnings last night. It was down a couple of bucks. Not a big deal on here, but I've been watching all these companies coming out with earnings because I wanted to see who was the first that blamed the dollar and or anything else, what they were blaming if they missed or what they said was doing well if they had not. But certainly Salesforce is the first one that is blaming the dollar rate and saying that that's exactly what hurt them. The exchange rate, they said that they're working to see if they can't fix that up. It's off a couple of bucks earlier, so not a whole lot happening on that. But as we look at it, I think that is going to be the defining theme in the next round of earnings. And we're probably going to see a few more people. But kind of when that dollar started to move, my guess is that several people had that hedged out, probably to 85 on the dollar index. My guess is that everything above 85 that will be in the next quarter, and that's where things are going to start to get a little bit sticky. As they say, a sticky wicket, which I don't know what that means, but I have a feeling it has something to do with some horrible sport like cricket or something. Cricket has wickets? Maybe someone can tell me. All I know is I would probably rather be in a Turkish prison than forced to watch cricket. Boy, I watched about 5 minutes of it on television. And I thought curling was bad. Cricket may be the... I bet they probably do that to the prisoners down there in Guantanamo. Here, you've got to watch this cricket game for the next 5 days. Because those games don't last 5 minutes. They last 5 days. What do people do for 5 days watching cricket? Anyway, I'll be back. Cricket.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And Andy's been IMing me. I've got to go through my IMs here. Everybody apparently is very interested in this cricket business. All I know is, like I was saying in the den, I'd rather be waterboarded than have to watch it. I don't know. People complain about baseball games being 3.5 hours long. How about 3.5, 5 days long? Boy, I tell you what. And I'm not much of a sports watcher either anyway, so I don't have to worry about that. Anyway, you can call me with your tales of cricket madness at 877-927-6648. I'll wait for you to finish dialing here. There you go. Anyway, not a whole lot happening other than the dollar being up, and of course, probably going to be pushing and putting pressure on a lot of those multinationals in the next quarter earnings. But this is the first one with Salesforce. Another thing actually happening, of course, kind of weak data over in Europe, and that's put pressure on most of the EU markets. But I thought this was kind of interesting. I saw this kind of quickly go through, so we may see a little bit more weakness than we thought. For about 20 years, France has been trying to get through a law where they can get rid of the sitting head and remove the president from office. We've always had the ability to do that with a procedure that is kind of starting to be bandied about now. But it's been almost darn near impossible. You had to basically create treason to get tossed out in France, and basically you can't get charged while you're in office, and so they couldn't throw you out. The whole idea was to get into office and basically steal as much as you could, and I think the last 20 years every president has been charged with a crime after they've left, and they just fight it. It seems like a very bizarre system to me in France, but I think they've had enough of it, and they're ready to go after the Bastille once again with the pitchforks. But they will be able to kick out any of them. There's a process that requires 10% of the upper house of senators and 10% of the lower house deputies to sign a resolution. Then they get about 30 days, and they vote on it. And they can kick him out. But the idea here is that Holland is, who's the president over there, it's just been, he basically decided to go full commie or full socialist, and it has been a utter disaster. Ayn Rand's books on Atlas Shrugged, where everybody is taken off, has actually come to happen. In a great deal. They've lost 30 or 40 of their big billionaires who have left from people like Mr. Depardieu. Depardieu is absconded over to the place where they have waffles, Belgium. Went next door and promptly is only paying 1/4 of what he was paying in taxes. Taxes could have gone to 95% in France, and most of the people with any cash got out before they could have it all basically taken from them. You see a lot of people being kind of mocked by the French press for it, but I think they'd rather be mocked and have a lot of cash than be in France and be poor. Because I have a feeling that's kind of one of those cities that you don't want to be poor in. But very interesting to see the political instabilities pretty much growing, I think, over in Europe as pressure continues to go. But as they say in socialism, eventually you run out of other people's money, and it looks like France is getting extremely close to that, and they're going to probably try to change the errors of their ways and be a little less socialist. We've seen this in now 2 major countries. Australia tried it. Put on some just horrifically huge taxes on electricity that basically had a lot of people thrown out of their houses. And the pendulum kind of swings back and forth, not only in the United States but other countries. But, of course, about a year ago, the people that actually pay the taxes in Australia, especially the poor people, were the most vocal about coming out of their leaders and tossing them out of office. I think the gal that did that lasted less than a year. My guess is that Mr. Hollandaise is headed in the next couple of months and going to be dropped in the sauce. Anyway, we'll be back in a minute. Got a few more things. We'll talk about Best Buy when we come back. Then we'll get into some charts.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, we were talking about that. A few people talking in the den about New York trying to lower its corporate taxes. You won't pay any corporate taxes for 10 years. But guess what? They probably weren't going to be paying corporate taxes in New York anyway. The problem with most of these very high tax states for employees is that you have to give them a higher salary just so that they can live in those higher rent districts to begin with. I saw something in the paper just a few days ago. 95% of businesses that are moving are either moving to Nevada, Texas, or Florida. I think the fourth one out there was Kentucky. If you're going to build a plant and hire 500 people, your salary is probably one of the biggest thing. And of course, they can live like paupers in New York, or they can probably live like kings in Nevada or in Florida or Texas for the same amount. Housing fairly cheap, and a variety of other things. But if you're thinking about moving your company, think about Florida. No state income tax. And they just tarred and feathered someone that tried to do that right out of the state, I think. So always a good place down here in Tampa. I love it. A very nice place. We were going to talk about Best Buy, and they had some decent earnings. They're up a couple of bucks, or we're up a couple of bucks. But we've been talking about them filling that gap, and most of these stocks out here, this pattern is what I'm looking for. Let's go ahead and pull that up here as soon as I can. Let's do that right now. Should have had that ready. BBY. Nice gap up today, and you know, as far as what's going on out here, was get this up here. I'm looking for most of these to kind of come and fill their gap. It kind of came off this high earlier, not surprisingly. And here's what I think is happening with Best Buy that no one wants to talk about. If you drew a line on every time Apple had an iPhone come out, you would see that Best Buy went up. About 6 months after, 4 months, 3 months after Apple's iPhones came out, you would find that Best Buy started to sell off. You always, since I've been in consumer electronics and started going to the Consumer Electronics Show 1984, 1985. I think the first time I went to CES was 1985. Anyway, always just a few days, or at that time it was just the day after New Year's, and I would take a plane. I remember the plane had seats that faced backwards for some reason. I'm trying to remember what it was. It was kind of like a Southwest airline at the time that flew between where I lived and Nevada. It was only about 2 hours. But every time I went there, it was all about whether there was something hot that everybody had to buy. There was the year that VCRs, the VHSs really came out, and the Blockbuster video stores showed up everywhere. And there were not just the VCRs, but new stereos to hook into to the VCRs, new TVs to hook to the VCRs. There was always the kind of pin action that went along with people coming in your store. The worst thing can be that there is no new hot product, or the product that is new or hot is $2,000 or $3,000 or $4,000, and not many people going to buy it. This year, Best Buy has a couple of things. One is the high-definition televisions, ultra-high definitions. But volume's pretty low when I went in and checked for people buying those. It's still much better than it was when the first LCD and LED TVs came out, because they were much higher in price. A lot easier to get somebody to spend $3-4 grand for a 80-inch television today than it was probably 10 years ago. But you need that product coming in the door. And what you can do is just go back there and look at the iPhone 5 when it came out, iPhone 4, iPhone 3. The one thing that drives business into Best Buy, and they get other people buying things, is the iPhone. On the off years, like last year, you basically find out nothing really happened. And right after the first of the year, basically the stock tanks. It's very cyclical, and for at least 30 years that I've been in consumer electronics, it has always been that way. So I'm thinking that if you wanted to look at probably a good short thing, look for it to fill this gap. Let's pop this back up. Let's look for it to fill this gap over the next week or 2 weeks or 3 weeks. My guess is that consumer electronics will still be good. We have plenty of volume out here with 13 million shares today. That isn't enough, though, to fill the gap that had 85 million shares down on the 16th of January last year. But my guess is you're going to slowly chew up into that over the next month. A lot of good news about Best Buy coming out, but wouldn't surprise too much about this kind of selling off. This thing's going to have to sit there and chew upwards, but it will probably do that maybe even to the first part of next year. My guess, though, know is as soon as Christmas is over, anybody that wanted to buy an iPhone is going to have one, and you're going to see a great deal of people buying things, going in to buy iPhones now. But that story will change as soon as and after the first of the year. And that's when you're probably going to look at this thing. It still has a high volume low down here at $22.15 from January 31st that has remained untested. And why this whole move back up here, consumer electronics, if you looked at the chart of cash coming into that business, it probably looks more like a heartbeat monitor than it looks like anything else. What else is going on? And try to get David Pogue on the show. I don't need those. Basically, those guys and Walt Mossberg, they're homers. They don't do you any good. And if you don't know what a homer is, it's the guy that calls the ball game for your local team. He's not going to really diss it too much. Because if you do, you don't get invited back. And that's why the opinions of people like David Pogue and Walt Mossberg are always glowing on Apple. They won't ever really say anything bad. When the iWatch came out, they basically talked about it a little and then shut up because they can't. I don't think that they can really say what they want to say without getting cut off from the Apple faithful. And that is problematic when your business is determinant on access. What do you do when Apple cuts you off? In fact, several companies, I'm trying to remember, I think it was Boy Genius, one of the bigger websites for technology, basically they rattle off about 20 things on iWatch that were either broken, didn't work, or had problems. And 2 days later, they were excommunicated from looking at anything at Apple. I think that they've now go undercover under a different name and something like that. But it's still problematic. Not a lot of difference between that and asking the president some sticky questions. You're probably not going to get the interview next time. You're going to get... You're probably going to get somebody that is a fellow traveler that won't ask too many tough questions. So that's it. Anyway, David Pogue, Walt Mossberg. I've noticed that, at least in technology, before I digress too far, that now that Walt and both David Pogue had to leave because no one could afford them at their respective newspapers, have got a new model, and that is David Pogue and Walt Mossberg are the happy side of the business, while other people at the same thing are the hatchet men. In this case, I'm trying to remember the gal's name for Recode right now, but she's the one that basically tells the truth. That's the one I would like to get on. She's on CNBC quite a lot. I'm trying to remember her name. I'll think about it soon. But it kind of an interesting business model where you're going to have to play good cop, bad cop against Apple if you have anything that might not be exactly glowing to say about them. And one thing about Apple is that they've gone after a program that has been written about extensively since the mid-'80s. That is one of evangelism. They'll find a bunch of pimply-faced kids in their basement, and they will groom them over time to be the evangelists for Apple, and slowly co-opt them, make them things that Apple couldn't live without them, and send these people around to always be on the blogs and do other stuff. But they have a true missionary calling. If you're interested in any of those books, you can read pretty much all about it in all the different books from Guy Kawasaki, where he actually lays out the program that he put in place. I think he was he employee number 13? Basically, they worked very hard in the 80s on coming up with a propaganda ministry that's still pretty much in effect today. And they used to call Steve Jobs had the reality distortion field, because it didn't matter what the reporter asked him. He would answer the question whichever way he wanted to, and kind of a predecessor for the way that politicians act today. In fact, a lot of the people from Apple that worked with that kind of manipulation of media have gone into politics, and I think that's kind of why you see a lot of the activities you see today. But I digress. Is there anything else in the news before we get into charts? I do not know. Let's make sure. PB buy. Nope. It's mad. There's some other stuff on my list that came in late that I wanted to look at. GoPro. GRPO. Is that right? GPRO, I guess. GoPro popped down today. I didn't see the headlines, but I'll check it out here. Of course, they've been doing everything to get the stock price down because they don't want it to go into the 23rd when lockup is over and have everybody do the mad dash to the exits while people are yelling fire in a crowded theater. Let's take a quick look at this. I was just going to do that. Chipotle GoPro. They finally announced their pricing for the ongoing public offering, where they're going to issue even more shares. 10.36 million shares of common stock at $75 a share. So that's why this thing's back under $75. Anyway, they're trying to keep a lid on this thing so it doesn't boil over till old Mr. Woodman can make it to the counter and sell a few of his. Of course, he has already done some of that, and this is part of that offering. But it is interesting nonetheless. Again, you need to start, especially on these recent IPOs, you need to be knowing exactly when these companies' lockups are over, if you at all are thinking about playing any of these. But my guess is that they are working fairly hard to get as much as they can out of this company. Why the getting is good. The big story, and you always want to watch stocks for the story stock. iOmega, Qualcomm, all these stocks that no one can spend 5 minutes of watching CNBC or Bloomberg without it seeing on the ticker or seeing it on the screen. Good indication that you've got a bubble. GoPro makes some very good products and probably the best marketer of those products, and makes huge margins. Not quite what Apple makes on an iPhone, but still pretty good. For a consumer electronic, 45% margins are monstrous. And why it has these, of course, they've started the other big story, and that goes back to George Soros, which is all of economic history is one deceit and lie after another. Your job is to get on why it's being perpetrated and get off before it's discovered. Well, I think that there's a lot of that going on in GoPro. They make a device, and with 40% margins, you got to think that most of these kind of companies are going to be living with 10 to 15% margins in the very near future. Can you manipulate a market for a short amount of time and keep those margins up? You can. The idea that GoPro says is that everybody will be uploading their content to our website, where they're going to use all our tools to process and edit it. And because of that, they're going to continue to want GoPro. GoPro has kind of become the Kleenex of small portable cameras, and frankly, I would like one myself. But I'm not beyond believing that the margins in this part of the business are going to be problematic in the years ahead. The question is, when does this thing break, and how hard does it break when all those shares become available? We'll be back in a minute. Give me a call, 877-927-6648.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, got to turn my volume up here. And that's right, the Tom O'Brien Show. After this show on most of TFNN.com. And then Andy Heck later, he's going to be talking about basically what he knows, which is commodities, and also most of the senators out here that are looking for their pound of flesh from these people that were basically moving things around in a warehouse to change the supply-demand curve. Can we say it that way? But it looks like they got their hands in the cookie jar, and he's going to talk about it a little bit about that, and the senators grandstanding themselves after the cow has left the proverbial barn. But interesting. Anyway, Andy and I were talking yesterday about some things, and I thought we're talking about commodities, and I can't remember. I should have written it down. There was something I really wanted to talk about, but I can't remember now. Oh, well, we'll move on. El Pollo Loco is another one of these stocks. It certainly looks like Wall Street thinks there's a lot of cash out here, and they think if they do not act now, they will not get the cash. Again, this goes right back into the book that I was looking at, Remnants of a Stock Operator. In that, Jesse Livermore talks about in 1907 that he was actually late 1906 was a little early shorting the market, and he knew the market was weak. But the final nail in the coffin, where he went full tilt boogie short and cleaned up handsomely to the tune of, I don't know, $500,000, $1 million from $10,000. Of course, they had 10% margins back in those days. So those guys could swing, as they say in the book, swing quite a line. But the part I'm looking at was that you found out that all these railroads at the same time were all fighting to get out one in front of each other. And the thought was, if these guys are all trying to come out with additional shares before the next guy, one guy did, whatever it was, 2 months from now, the next guy did 6 weeks, and then the next train rail company decided to move theirs up to 4 weeks from then, and he knew right then that everybody thought that there wasn't much cash left, that they were all doing these secondaries and pushing more stock out, and they were all racing to the goal line to do it. And it's never good to see these recent IPOs pushing even more stock out the door. That pretty much means that they think that the window for higher prices in their stock is probably closing. El Pollo Loco, of course, a lot of people here at TFNN equate it with the chicken company on Breaking Bad, because I guess everybody was watching Breaking Bad for a while. But it was down. It's kind of come back up off its lows out here. It will still be defended for a while. But just all these companies out here looking like they're weak seem to be doing the same thing, which is pushing more paper out the door, which is going to, of course, add more liquidity to the stock, and eventually probably make sure that for years to come it will trade at a lower price than it did at the IPO. Very hard to add a great deal of shares to a stock and not have it go down. It has to be growing faster than that. Probably a good company. Maybe there's some trades in it. I just don't see when companies like this race to the exits that it's ever good. See you tomorrow, same bat channel, same bat time. So when you can, not when you have to. We'll see you in studio tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
watching Tiger TV.